Welcome back. Gosh, what a day for markets. It is just getting rough out there. It is raining negative digits all over the place. Seeing a bunch of red on the screener maps. It is just getting brutal. Welcome back to Kyle's Financial News. I am your host, Kyle. Today's date is July 18th. Netflix did report today after the bell. They added 8 million subscribers. They did beat on revenue and earnings. Not seeing that big move that was anticipated after hours, though. There was a pretty decent sell-off as soon as they posted, and then they immediately bounced right back up, pretty much just to break even about where they closed for the day. They did disappoint on their revenue outlook going forward, so I suppose over summer here they're not expecting to do as good with their numbers as maybe they thought they were for the year, but that could certainly change in the coming months, and who knows what the next 6 months in total will look like. So we will just have to keep monitoring them. Jobless claims are up. This data will only further help the Fed kind of get into position to start easing on rates. They were forecasted to be around 230,000 for the week. They actually came out at 243,000, so only about 13,000 or so higher claims. Inflation is estimated to only be around 2.6% at the moment. Keep in mind though, this data can sometimes get adjusted weeks, if not months later. I have seen it before. It's pretty disappointing when that does happen because the market certainly has a reaction to it, at least when it's released, based on whether or not that news is going to be positive or negative. So to then have data significantly sometimes revised in the opposite direction, and I've seen that, it can be quite the surprise when that does happen, because then it's happening on a non-news event day when you're not expecting it. Just suddenly the revised data hits the stream and algorithms and trading bots and the larger guys are able to run with it, and it kind of catches the little guys off guard. I know some of the Fed members are eager to start bringing rates down, but just so much delicacy is needed. If Jerome Powell starts letting air out of the tires here too soon, it could be the very factor that keeps us from getting up and over this hill of inflation. And if we kind of stop right at the cusp there and start to roll a little bit backwards, it's going to be bad. It will highlight the Fed's, their lack of confidence in their control of inflation. And then it just airs a whole bunch of questions of, do they know what they're doing? Are interest rates really the right tools that they should be using to have the fight with inflation? Should they be still quantitatively tightening and letting go assets off their balance sheet? Just much more unknown and uncertainty will start to come into play. So the Fed really has to, JP really has to make sure that when he pulls that lever and we start lowering interest rates back down, granted, we will do it slowly, probably at 0.25% or so at a time, but it has to be a one-way direction. We can't be lowering interest rates by 0.25, 0.5% before the end of 2024 or early 2025, and then see inflation start ticking just ever so back higher. That's going to cause a panic based on the uncertainty of not knowing how much higher inflation could then go, and then also the problem of if the Federal Reserve stops lowering rates and they start talking about pivoting back upwards again, it's not good. The Fed has to maintain the image that they have as strong of a grip, as much control over this situation as possible. So even though the Fed members, a number of them, are pro lowering the interest rate for their own reasons, they really have to just be patient with the head of the Federal Reserve. And I think we have to just provide a little bit of trust and Jerome Powell to make the right moves. So yeah, markets really took a beating today. The S&P 500 was down over 70 points at the low and has since bounced back up just a smidge. The Dow hit $41,375 this morning and then promptly reversed nearly 800 points. On the S&P 500, we've now undone progress going all the way back to July 3rd. It's almost just like a full reset for the month. It's only the 18th, so there is still time to achieve that 4% expectation for July. But that would mean that we would have to be rallying pretty hard here in the coming days. Now, I'm not sure I'm ready to attribute the sell-off to anything other than just taking profits and moving money around yet. Earnings season is here, and earnings are starting to heat up a little bit. We've had a lot of banks reporting this week. They may just be what saves us here and pulls us back upwards if we can get some blockbusters. A quick piece on crypto. I was reading this article yesterday about Larry Fink. If you don't know Larry Fink, he is the CEO of BlackRock. And if you don't know BlackRock, BlackRock is the largest asset management company on the face of the planet with more than $10 trillion worth of assets under their control. Larry Fink notoriously, as well with JP Morgan, Jamie Dimon, they've both notoriously been very anti-crypto. All the common sayings. It's all only used by criminals. It's a bunch of fake money. It's a pyramid scheme. It's this, that, and the other thing. It took a couple years for their companies, at least, to start opening up to the idea of providing means for their customers to be able to invest in crypto. And I think the idea there is, even if they aren't interested in holding it, and they themselves, be it CEOs or just members of the company, aren't interested in crypto and don't believe it and whatnot, they're at least thinking, well, maybe we can make a little bit of money off of it, right? Like if our customers really want to buy it, then can we create a little bit of a marketplace there and have our fees attached to it, and maybe it's a little extra income stream? Well, sure enough, that was a hit, and now what we have is Larry Fink, at least. We're still waiting on Dimon. Larry has come out and said, I was totally wrong about crypto. I finally did my research, and I'm convinced it's real money now, and I was just rolling my eyes in the back of my head. Because I'm sure this whole time where he was saying it's trash and only criminals use it and yada, 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 he was just buying hand over fist as much as he could. And there's no saying how much he has, or we should be able to see how much the company itself, BlackRock, is managing, though I suspect largely that's just going to be customers holding their cryptocurrencies through them. It's not like BlackRock themselves is directly in ownership of Bitcoin or whatnot, but I'm sure Larry has some. And of course, it's not until it's to their benefit that suddenly they're 180ing on it. And it just, all that research and education has been there the whole time, and it's just because of their lack of willingness to even accept it, whether they were being told that it's legitimate or not. So Jamie Dimon, CEO of JP Morgan, is another very popular denier of cryptocurrencies and Bitcoin and all that good stuff. I don't think it'll be much longer before he's coming out and saying, oh yeah, crypto's actually, I love crypto. I can't believe I ever said a bad thing about it. I'm sorry. And how many crypto will he then own at the time? Just ridiculous. Trump says he wants the USA in charge of crypto just recently, or not necessarily in charge of it, but the leader of it. And I think he sees China as a big potential competitor in that category. But at the same time, cryptocurrencies are, by and large, somewhat illegal in China. Exchanges and being able to buy it on the market and such is very difficult in China's region. And the thing with cryptocurrencies is you can't just, it's not just an internet protocol like a VPN tunnel or a certain game service, or like it doesn't abide by just traditional networking ports and operations to where a country can just block it off, right? Like it's not something that you can just type into a firewall and there goes Bitcoin. Now you don't have to worry about it. It just operates through regular web browsing protocols. So there's no stopping it. The growth is already just too explosive. It's a fire that cannot be put out. I think China will eventually kind of roll back some of those regulations and blocks on it, though they're probably trying to just make sure that their digital currency system or whatever is fully established and being widely used before they even consider making Bitcoin or other cryptocurrencies being allowed to be reused in their country again. So we also know potential Vice President Mr. Vance is also now a known crypto holder. He's also potentially going to be the first millennial vice president for the United States. So potentially he has some good kind of tech savviness to him, which would be nice. So get this. Information from the Federal Election Committee revealed that 1% of Trump's campaign funds was donated cryptocurrencies this last quarter, which I find somewhat interesting simply because crypto as a whole right now is only about 1% of the global marketplace, market economy value, I suppose. So as we see more and more crypto expansion and people getting into it, especially through their retirement accounts, and if we have people like Larry Fink, CEO of BlackRock, pushing it and encouraging it to his customers and all that stuff, it's entirely possible that we are on the adoption phase of your everyday consumer, the retail market adoption phase. We could already be done with the institutional adoption phase, though I think there's a little bit of institutions still wanting to get in, especially the big ones, even though we have some of the biggest now saying that they admit that they were wrong about it, and so on and so forth. That doesn't necessarily mean that they're holding a large investment in it from a company's perspective, but if they're going to, then they're going to be doing that very soon. And that partly plays into why I think Bitcoin will not be making a new all-time high here very soon, in that I think institutions are really dying to get in, and they don't want to be buying at these levels. They want to be buying much lower, in like the $30,000 to $40,000 range. And then pending that, if that does actually take place, then we could be looking at a consumer adoption, a widespread consumer adoption, which doesn't happen overnight. You know, you're still talking a 10 to 15, 20 year roadmap on that actually taking place. But it certainly is getting more popular, even with the occasional bad apple like NFTs or exchanges, FTX, you know, exchanges going under. That's just all part of the growth process. There's going to be growing pains. So that's all I have for today. Thank you so much for watching. Please consider subscribing. It really helps me out and supports me and encourages me to keep going. Tune back in tomorrow after market close, and I should have an update for you then.